Welcome to the Deep Dive. We're here to cut through the usual noise. And today, well, we're tackling something pretty fundamental. It's a real clash of financial worlds. We're talking traditional finance TradFi and its big challenger, decentralized finance, DeFi. There's this saying, it floats around Wall Street, not official, but everyone knows it. It goes, if the client understands how it works, the product is no longer profitable. Think about that for a second. It perfectly sums up TradFi, doesn't it? A system built on, well, making things complicated, artificial complexity, obscure clauses, fees hidden away, promises that, let's be honest, often fall apart when things get tough. They talk about security, but you have to ask, security for who exactly?
Yeah, and the contrast is just striking when you pivot to DeFi. It's brutal in a way, transparent. It's all out there, open source. DeFi doesn't promise you comfort. There's no safety net, no friendly voice on the phone if you mess up. But what it does offer is something TradFi usually keeps locked away. Real control, verifiable control, radical transparency, and importantly, direct access, no gatekeepers.
Exactly. That's really the core of our deep dive today.
Yeah.
We want to get past the tech jargon and uncover the deep philosophical difference here. Okay, so let's unpack TradFi a bit more. It works on this logic of forced trust, you could call it. The system basically tells you, look, you can't handle your own money. You need us, the credible middleman. Your bank holds your cash. The government tells you how you can use it, how much. Insurers say they'll protect you as long as the premiums keep coming, right? Fund managers charge fees even when your investments are losing value.
So TradFi is essentially selling this idea of security, but what's the actual user experience? What are the hidden costs, the limitations of that so-called security?
Well, that's where the metaphor of the padded cell comes in. It's security, sure. You might not scrape your knee, but you definitely don't have much freedom to move, do you? Your bank says your balance is safe until there's a crisis. Then suddenly it's your tax money bailing them out, or your account gets frozen. Suspicious activity. No real explanation needed. Your currency, it can just silently bleed value through inflation, and you don't get a vote on that. So this forced trust means the guarantees themselves rely on a system that can, frankly, take your resources without asking, or lock you out based on rules you never see. It's like security you buy off a shelf. Looks good in the packaging, but often it's just an illusion when you need it most.
Right. An illusion built on complexity and hidden levers.
Precisely. Now let's pivot to DeFi. The trust model is completely different. It's not in bank managers or institutions or government guarantees. It's in smart contracts.
Okay, so code, basically.
Exactly.
Yeah.
Self-executing agreements. Written in code, yes, but crucially, visible to everyone on a public blockchain. Want to lend tokens? The contract sets the rate. Anyone can check it. Want to swap assets? You go to a DX, a decentralized exchange. No permission needed. You just connect your wallet.
That touches on access. TradFi is notoriously, well, exclusive, isn't it? You need history, credit scores, maybe a lot of capital, sometimes even the right passport. How does DeFi break that down? How is it more inclusive?
That's maybe one of the most radical shifts. With DeFi, if you have a digital wallet like MetaMask or something similar, you're in. That's it. Your nationality, your credit score, how much money you have, none of it matters to the protocol. You're just an address on the blockchain, validated by the network, not by some gatekeeper. It genuinely opens doors that TradFi has always kept bolted shut for potentially everyone, everywhere.
And this direct access, it must change how information flows too, right? TradFi loves its secrets.
Oh, absolutely. TradFi thrives on opacity, doesn't it?
Yeah.
Hidden derivatives, funds that aren't what they seem, complex contracts you only understand when it's too late.
Yeah.
DeFi, on the other hand, it lives on transparency.
Yeah.
That smart contract we mentioned, it's on-chain. Its entire history, its current state, all recorded publicly, immutably, locked liquidity. You can see it on-chain. Token burns to reduce supply. Again, verifiable on-chain. You don't need to trust a glossy quarterly report. You have real-time, hard data that anyone can audit.
Okay, so transparency is key. But this sounds like it puts a lot more responsibility on the user.
It does. And that's the trade-off. This shift gives you incredible control, but it demands radical responsibility. There's no customer service helpline to call if you lose your keys, no forgot password button, no government bailout if a protocol fails or you make a bad trade.
And that's probably where many people pause, right?
Yeah.
They prefer the perceived safety cushion of TradFi, even if it means less control.
Exactly. It's the padded cell versus the open sea. DeFi is definitely the open sea. You can drown. Let's be clear about that. Risk is real. But you also have the chance to navigate, to explore horizons you'd never even glimpse from inside TradFi's controlled tank.
You see practical examples of this on platforms, right, where liquidity pools are open.
Yeah, exactly. Platforms where anyone can provide capital to a liquidity pool and earn fees or rewards transparently. You get verifiable proof of token supply changes, like burns. Some even offer automated trading tools, trying to make it more accessible. It's not about fancy reports and dense legal documents. DeFi aims to offer real-time, on-chain proof of how it actually works.
So maybe another metaphor, if TradFi is like a casino.
I like that one. TradFi's casino. Sleek promises of winnings, but fundamentally, the house edge is built in. The rules favor the house. They've just convinced you you're playing a fair game. DeFi is more like an open-air game. Yeah, maybe out in the wilderness. There's no house. There's just the environment, the market conditions, the code's logic, the probabilities, and your own skill, your own decisions.
In one, you're essentially a passive client, maybe even a captive one.
Right. In the other, you have the potential to be a sovereign participant, active, responsible, in control. So wrapping this up, what's the big takeaway for you listening? The core insight, really, is that this isn't just a technical squabble about blockchains versus mainframes. The clash between TradFi and DeFi is deeply, fundamentally philosophical. It's about control, transparency, and trust.
Yeah, it really boils down to what you value. TradFi offers you the role of a passive client. It promises security, but often that security comes at the price of your own financial freedom and agency. DeFi, well, it demands more from you. It demands risk awareness, discipline, self-custody. But the reward, the potential to be your own financial owner, a sovereign agent in a transparent system.
And here's a provocative thought to leave you with. Once you really start to engage with DeFi, understand its principles, stepping back into a traditional bank, it might start to feel a bit like watching badly rehearsed theater. All ceremony, but maybe not much substance behind the curtain.
Interesting perspective.
So here's a practical challenge for you, a little exercise. Pick a TradFi product you use, a savings account, maybe a credit card, a brokerage account. Then do a little digging. Find its DeFi equivalent. Maybe that's staking for savings or using collateralized lending protocols instead of a credit card or trading on a DEX. And then ask yourself this fundamental question as you compare them. In each system, who really controls whom?